Massive news for Bitcoin, as it seems that another 50 million freaking people are about to get access to be able to buy Bitcoin at the click of a freaking button. This is a massive, massive cryptocurrency adoption story. I'll be diving into that in today's video for you. And of course, still we have fears hanging over the market of the Federal Reserve meeting. We'll break that down for you as well. My name is Lark. Every day I make videos talking about cryptocurrency investing. So if that's a topic you'd like to learn some more about, maybe just stay up to date with, then you should definitely subscribe to the Lark Davis channel. Also, you can take a quick second to tap on that thumbs up button just for the YouTube algorithm. Man, that'd be sweet. And of course, if you'd like to receive a notification when I put out a new video, click on that notification bell. By the way, if you are a cryptocurrency trader, then you need to get yourself an account over on Femex. It is the best exchange for longing and shorting a wide variety of the top cryptocurrencies: Bitcoin, Ethereum, Chainlink, Tezos, Cardano, Solana. They got all of the good stuff. Use the link down below in the description and you're going to get 10% off of your trading fees, as well as up to $3,600 in trading bonuses for doing things like making your first deposits, as well as making bigger deposits. So go ahead and check that out using the first link in the description. Now let's talk about the price of Bitcoin. So we are still maintaining our higher lows that we've been putting in ever since July. So, I know the markets have been down a lot recently, but perspective is obviously very, very good. Our key line of support here around $42,000 has maintained its hold. We have not even come back down to retest that key line yet. Obviously, it would be a very, very important line that we'd want to see hold if we do get any lower retests here for the market. But currently, what is happening with Bitcoin? Nothing very exciting, I would like to say. Bitcoin is kind of in a bit of a boring phase right now. Essentially, what we have seen here for Bitcoin is that it is just kind of chilling, to be honest, which has been ranging sideways essentially for the ever since the 4th of December. So for the last almost 2 weeks, we've seen Bitcoin just kind of ranging. I mean, we got up to 52,000, we got down as low as 45,000, but that's just kind of bouncing back and forth at this point. As I have been saying for quite a while, the downtrend is still in effect for Bitcoin. This is the line that we need to cross before we can start talking about releasing the bulls again for Bitcoin. We're still in a downtrend. Obviously, we're coming up to some very important critical junctures here because we want to see this support line holding at 42,000. But then, of course, the more time goes by, the closer we get to these two lines intersecting. And basically, some magic's got to happen at some point, one way or the other. But we do want to see a break above this right here. I think particularly we're starting to see some important areas of resistance here that right around $52,000 and $53,000 are probably the very important areas of resistance we need to conquer to get back up there. And of course, 52,000 right now would be approximately where if we saw a decent pump up would be where our trend line would act as an area of price resistance here for Bitcoin. So that's the line we need to break out to get back into our uptrend for Bitcoin. Until then, bulls still kind of running the show here for Bitcoin. We can also, of course, note that we are stuck right now between two very, very important moving averages. So the blue line is the 200-day simple moving average, which is sort of less respondent to recent price action, more of a smoothing out, if you will. And we've actually seen price bounce as support yesterday, daily candle close, but just on that line, basically. So it did bounce there. But then on the flip side, we've seen the 200-day exponential moving average basically now acting as an area of price resistance. The price currently just bouncing back and forth between those two areas. Obviously, the bounce off the 200-day simple moving average was a nice thing. Let's reconquer the 200-day exponential moving average, which basically then put us ready to rock back above and break out of our downtrend. But a loss of the 200-day simple moving average with a daily candle close underneath that would not be awesome by any means. You can actually see that we've only had really wicks below this and really just closing right on the line, which I'm not counting that. I'm not counting that. So we've had wicks below. We haven't had a full body candle closes below the 200-day moving average right now. So still in a bullish enough zone here for us, even though we're still in this downtrend. Now, just as well, I wanted to point this out. We're currently down like 30% from the all-time high. And I just want to tell you, Everything is okay. In 2017, the price of Bitcoin dropped more than 30% 4 times. It dropped by more than 40% twice. This is all stock and standard stuff for a cryptocurrency bull run. This kind of volatility, completely freaking normal. Hey, you know what happened back in 2017? The smart money, they bought those dips. Look at this dip here. This dip went down to like $700. What was that? This dip was down to like $800. This dip here was like $1,800. It was crazy. It was crazy. In fact, I remember buying this dip in particular. I remember that because we had this giant run up, and then there was this crazy dip that happened. I was like, oh my God, I gotta buy some Bitcoin, man. Didn't buy a lot back then, but I bought a little bit of Bitcoin on that dip back here. It didn't, of course, quite nail the bottom, but it was still a decent entry at the time. And of course, look, any of these dips that had been bought back then, zoom forward a few years, turned out to be very, very good dips if you held through all the volatility. So there you go. There you go, man. Buy the freaking dips when you get them. 30-40% downturns are nothing in crypto. Now let's get into the big story, because this is an absolutely massive one. 50 million people in Germany are now going to be able to buy Bitcoin via their bank accounts. Huge news story. Massive for adoption. Massive in terms of the bull run as well, because what do you need to have a bull run continue? You need to have more money coming into the market all of the time, which is exactly what we've been happening with all the stories we've covered in 2021. I mean, I can't even think of like a top 5 biggest stories list, because there's been so many just big stories happening. And this is another one of those big stories that's happened. German savings banks want to enable Bitcoin for 50 million clients. So this would allow them to buy it directly from their checking accounts. Absolutely massive story. So in total, 50 million customers with 1.2 trillion euros in assets between them. That's a lot of money, man. That's a lot of freaking money. So this is a very big potential adoption story. Now look, obviously, not all of the 1.2 trillion euros is going to flood into Bitcoin. What if 1% did? That's a lot of money. That's a lot of money. What if 2 or 3 or 4 or 5% did? That's a lot more money. Every time we get one of these big adoption stories, it just adds up, because it just provides the potential for billions and billions of dollars worth of money to come into the cryptocurrency markets. And when you give people the rails and the roads, they will take the trains, they will take the planes, they will drive their cars on them. It's what they do. And so when we enable 50 million people in Germany to be able to buy Bitcoin via their freaking checking accounts, man, that's big. That's big. And even if they don't buy on day 1 or day 100 or day 500, they're going to buy at some point, because they'll have a conversation with a friend. Are you into that Bitcoin thing? Yeah, it's a good time to buy. Oh, I can just buy that at my bank. I'll just put 100 euros on it. I'll put 500 euros on it. I'll put 1,000 euros on it. And their bank handles everything. They don't have to worry about private key management. They don't have to worry about going to some shady third-party exchange. They get to go to their bank that they've been banking with for all their lives and buy Bitcoin from a trusted intermediary who will then hold on to the Bitcoin for them. Personally, I don't want my Bitcoin to be sitting in a bank, but I understand that a lot of people do. This meets a big gap in the market, and it's a very smart play by these banks. Of course, they've seen the money that Cash App and PayPal and all these other guys are making. These guys are making just bank by offering Bitcoin to their customers. Cash App literally only offers Bitcoin. They've been making millions upon millions of dollars in fees by offering Bitcoin to their customers. The banks want a part of that. They see where the future is heading, and they want to be involved. And of course, this is funny. The guys at Bitcoin Magazine posted this back in 2015. The banks blocking all Bitcoin-related transfers. Now, of course, they're offering Bitcoin trading. Classic Absolutely freaking classic. Of course, we've seen so many banks make this exact U-turn. 4 or 5 years ago, can't touch Bitcoin, not allowed to buy Bitcoin. We're going to shut down your account if we suspect you have ever even looked at a Bitcoin. Now it's like, would you like to buy Bitcoin at our bank? Welcome to the future, my friends. It's a very exciting time. Now let's talk about the Federal Reserve. So this is an article in Fortune.com. Even when the Fed starts hiking rates, stocks could keep rising for 10 months, according to Deutsche Bank. Now, the meeting with the Fed, everybody's afraid of this. Of course, the assumption is going to be that they're going to accelerate the tapering process. So essentially right now, the Federal Reserve has been buying $120 billion a month worth of assets. They've already cut that down by $30 billion. They're expected to announce tomorrow that they're going to cut that. They're actually going to double that from $15 billion a month to $30 billion a month, essentially getting us to the same goal, but faster. I don't see the big problem with this, but investors get scared by these kind of things, and it's really, at the end of the day, not that big of a deal, although it could cause short-term market volatility. Long-term doesn't really matter all that much. But whether we start to see the Federal Reserve hiking up rates, that of course is another major question that has been circling around this exact topic. What's going to happen at the big Fed meeting tomorrow? Are we going to see rates going up? Well, obviously there is a potential that that could happen. Will we see them trying to combat inflation by pushing up interest rates? I mean, inflation's gone absolutely out of control. We very well could see this being one of the things that they try to use to combat that. Now, if that does happen, it's not going to happen overnight. Interest rate hikes also spook the markets, right? The free money's a little less free at that point. You have to pay a little bit more money for money, essentially. But if it does happen, as Deutsche Bank points out in this report here, if it does happen, the effect is unlikely to be immediate, but we have not got confirmation that there will be an interest rate hike. So it's just the rumor. Every time the Fed has a meeting, this is the conversation. Is there going to be an interest rate hike? Are they going to decrease interest rates? Of course, now everyone's looking at a rate hike, considering the inflation's been soaring and all that stuff. But at the end of the day, the Federal Reserve, they're just putting lipstick on a pig, right? They can't actually control anything. They like to pretend like they have some kind of grand control over the markets and the money supply, but realistically, these guys are just pushing around deck chairs in the Titanic, man. The inflation is out of control. The debt is out of control. I mean, the U.S. just increased their debt limit by $2.5 trillion. They can't pay that. They're never going to pay that back. They couldn't pay the $2.5 trillion, let alone they put the debt ceiling up to $31.5 billion or something like that. That money's never getting paid back. It's bad debt on top of bad debt, on top of inflation, on top of more inflation, on top of more money printing. They have no idea what they're doing. Or they do know what they're doing, and it's incredibly nefarious. Either way, it's not a good situation for the dollar long term. That's why Bitcoin. Opt out, buy Bitcoin. Have a bit of Bitcoin in your portfolio as a hedge against this insanity. Final story for today. Elon Musk, of course, voted Times Person of the Year. Congratulations, Elon. In the interview, they were talking about cryptocurrencies. He said that he prefers Dogecoin over Bitcoin as a currency. He said Bitcoin store value. Obviously, we agree with him there. But interesting to hear your take on it. Do you think that Doge makes a better currency than Bitcoin? Or is Bitcoin the better currency than Doge? That's your question for today. Hit me up with your answer down below in the comment section. Which is the better currency, Doge or Bitcoin? Thanks so much for watching today's video, and peace out till next time.